Securities offered through Kestra Investment Services, LLC, Kestra IS, member FINRA SIPC. Investment advisory services offered through Kestra Advisory Services, LLC, Kestra AS, an affiliate of Kestra IS. Capital Advisory Group, Inc. is not affiliated with Kestra IS or Kestra AS. Neither Kestra IS nor Kestra AS provide legal or tax advice and are not certified public accounting firms.
You work hard for your money. For the next hour, you're going to learn how to keep what's yours. Capital Advisory Group presents Keep What's Yours. Here is Josh Gilbert and Jeff Zufall.
Hello and welcome to Keep What's Yours with Jeff Zufall. I'm Josh Gilbert, sitting here with Jeff Zufall, Senior Tax Strategist and Wealth Advisor with Capital Advisory Group. Happy New Year, Jeff.
That's right. Happy Saturday and Happy New Year. First show of the year.
So we did one on New Year's Eve last week,
yes,
and we were kind of saying Happy New Year, everybody. This week, it's official.
It's official.
And there's so many things to talk about in the new year. There's so many things to talk about because now, I'm turning on the radio and I'm hearing the tax commercials again.
Yep.
Everybody's
starting back up.
gearing up and everything. The first thing that I'll say is don't try to get started too soon.
No.
We'll talk about that in just a second. We've got a lot to do today, Jeff. But since it is the first show of the new year, I want to share a New Year's story with you.
Okay.
And I want you to tell me the tax implications of this. Every year, the news barges into a delivery room. A woman's got, she's sweating. I mean, your kids are grown, but you probably remember what it was like.
Yes.
My son is 2, so it was, very recent memory. Mm-hmm. The last thing I think a woman or a new dad wants is for a camera crew to barge in with the lights on and say, here's the first baby of the new year,
yes.
And I don't know who it was in the state of Missouri, but down in Texas, Annie Jo Scott was born at 11:55 p.m. on December 31st, 2022, Saturday night at 11:55 p.m.
Yes.
Her twin sister, Effie, came coming down the chute.
They named her Effie?
Annie and Effie. Let's get the list out of craziest name trends of 2023. Came down the chute 12:01 a.m. the next day, January 1st. So the first twin, Saturday night, we're all partying, getting ready to count down. Twin number 1 comes out. 6 minutes later, the next day, the next month, the next year.
That's the kicker.
The second twin comes down at 12:01. Now, Heidi was telling us this story during the week, and it's a cute story. The identical twins have separate birthdays.
Yes.
Do you have one birthday party or two? I think they'll have separate birthday parties, Jeff, for maybe 2 years, and then the parents are like, enough with that.
That's right. You're going to do it on Christmas.
Right. And then the one twin, their birthday is on New Year's Eve when everybody's in party mode.
That's right.
The second twin has to have a birthday
in hangover mode.
When everyone's hungover and they're like, I don't want to go to another party.
Yeah. So,
I joked to Heidi. I said, that second twin is going to have a chip on their shoulder for years.
Oh, yeah, for years.
But I asked the listening audience, 84126, you can weigh in here as well. Are there any things out there, like if they wanted to get driver's licenses, the second twin will probably have to wait till January 2nd or this year, January 3rd, for the DMV to open back up. They'll have to wait 3 or 4 days to get their driver's license as opposed to their twin sister. But is there anything out there that goes based solely on year you were born? And the only thing I could come up with is, maybe if they instituted the draft, which heaven forbid that they do that. Sometimes they go by birth year on who's in the lottery and who's not. Yeah. But I couldn't think if somebody else texted in and said, club soccer teams, base it on what year you're born rather than what age you are.
Yeah.
But I couldn't think of anything really substantial, but then the text started flying in.
Yep.
And I guess some of these people must listen to Keep What's Yours on the weekend. They hear you on with Jennifer and Wendy. They start flying in. What about claiming them as dependents on your tax returns?
So it goes by December 31st, 11:59. So if the first twin was born, she's a 2022 dependent, they get to claim her on last year's or this year's tax return. The other one has to wait until 2023.
So for parents, for new parents,
yeah.
I mean, you want to claim dependents, right?
Yes, it helps you.
You get
You're paying for them anyway, so
right.
you might as well.
You get a kickback on your tax
yes.
returns.
I mean, the child tax credit won't be as great as what it was in the past unless they vote something in, but I don't see the hardship in a sense from like how COVID hit us so hard.
As it stands right now, there are no votes.
Well, no nothing.
In this current Congress.
Whole nother story.
Right. But the dependent issue, they could go on this year's tax returns, 2022, and they could drop in the first twin and say, boom,
yes.
we had a kid in 2022. Here's her social security number.
Yeah. Next twin has to wait to be claimed on 2023.
Has to wait.
Yeah. Seriously.
A whole year. They can't call the government and say, look,
sorry, we want to,
the delivery, was initiated in, 2022. It didn't finalize in 2023.
Look at it this way. It's positive from a standpoint because they didn't have the child all of 2022, but yet right at the 11th hour, they had a kid.
So at least the one twin,
exactly.
they get it, even though they didn't have any,
all
any
year
hardships
long.
all year long.
Yeah. And then the other one has to wait till 2023. The other thing applies to anybody out there that might be, divorce, separation. The key to filing, either married filing jointly or separate, or married filing separate in a sense, is 1231. If you are still married but in the middle of a divorce, you technically are either married filing jointly or married filing separately. And typically, I don't suggest you do married filing jointly just because,
that's going to get messy.
It gets real messy real fast. But if you're divorced prior to, so if you got divorced on the 28th of December, you're single for the whole year, even though your withholding was probably set up as a married filing jointly. So you need to really watch out for that from a tax angle.
And tell me this, what's better for my tax liability, being married or filing single?
So if you are married filing jointly is the best, hypothetically. Again, depends upon the situations, though, like what assets you have and, your income and so on is probably the best. But if you were withholding as married filing jointly and then flip to go single, your standard deduction drops like a rock. So you could do head of household, which means you just get a little perk in a sense or an increase in your standard deduction. But typically most people, the kids are already gone. You're going to go from married filing jointly where you have like a $26,000 standard deduction to 12 or 14. Poof. So
right.
That's and we find where people fall into that tax trap, not realizing what was going on.
So do you think that there's ever married couples who are in the midst of a divorce and they come together over the table and they say, you know what, let's not do this until January 2nd and
yes,
get the tax?
Or hurry up and get it done by 12/31 because one can't stand the other.
Right.
And they don't want to have to file. I mean,
to file jointly with them over the next 4 months.
Exactly.
Huh.
So that's where it gets a little tricky. But yeah, that goes back to the dependents. Everything hinges on what was your status 12/31.
At 11/59/59.
Yes. And you can't say, hey, we're divorced, but we're going to do married filing jointly one last time. You can't do that. It's if you're single, you're single. If you're married, you're married.
Paperwork was signed and stamped.
Done deal.
On 12/31 at 5 o'clock at night. I don't know what kind of notaries work at 5 o'clock on New Year's Eve. But if it was...
The ones you don't want to talk to. No.
Right. Signed, sealed, delivered. You cannot file married filing jointly.
You're single. That's how it goes.
How about that?
Yeah.
So congratulations to Annie and Effie for being
That's right.
born.
Congratulations. They win anything? They get a prize or anything?
I don't know. Maybe like the Today Show will have them on and they get free diapers or something.
That'd be cool.
But congratulations, born on separate days, separate months, and in separate years.
That's even crazier.
Identical twins. Well, now their parents are going to have to call Jeff Zufall and say,
That's right.
How do we do this? Okay, but I like that. They do get a nudge because they get to claim a dependent that they never
really
had.
Didn't have until
they
the
never had
11th
in
and a half
2022.
hour. Exactly.
Right, but then the IRS is going to come in and say, no. You have
can't have the other one.
You can't have the other one. You snuck this one in at the last second.
That's right.
You can't have the other one. If they wanted to call you, Jeff, they would dial 636-394-5524. Capital Advisory Group, Jeff Zufall. He is the senior tax strategist and wealth advisor with Capital Advisory Group. 636-394-5524. And they can find you. They can make an appointment. This is the time of year that, like I said, I keep hearing the commercials coming back on.
It's gearing up.
It's like everyone's having a lovely Christmas. Merry Christmas from all of us. Da-da-da. And then, 1/1, it's like, boom.
It's tax time.
Yeah,
Get
are
worried.
you being hounded by the IRS? But you know what? Let's go to a commercial break because I do want to talk about those commercials.
Okay.
Because I just heard another one the other day, and it sounded very threatening.
Oh, very.
And I kind of want to lay it out. Who are these people that are advertising on the radio? Mm-hmm. What can they do for us? What can't they do for us? And why are they trying to scare me about the big bad IRS? We'll go over that. But I want to remind everybody again, I use Jeff Zufall. You can too. Speaking of Heidi, she's like, what's Jeff's number again? Here it is, 636-394-5524. I said, well, what's wrong with the person you're using now? And she says, he doesn't ask us any questions. Yeah. He doesn't, look into our stuff. I think that we're leaving money on the table.
Yeah.
And the name of this show, the name of your book, the name of the lifestyle that we want to try to live when it comes to dealing with taxes is we want to keep what's ours.
Yes.
Keep more on our paychecks.
That's right.
In our pockets.
In your pockets.
And not going out to the federal government either in taxes that we pay that we maybe didn't have to pay or taxes that we paid because we didn't know.
It didn't know. Yeah, you don't know what you don't know.
That there was something out there that we could have been filing and keeping a little bit more of our money.
Yes.
You save us when it comes to paying for our kids' school. There's millions of people out there listening right now that have kids that are in school, that they're paying tuitions, that they're paying daycare stuff. So if they're not doing anything for that, you can help them out. 636-394-5524. And it's not just about kids' school. It's about medical bills. It's about
all that.
All of that.
It's all part of the equation.
So if you're not doing anything right now, Jeff can almost guarantee you that you're leaving money on the table. Let's go to commercial break. And when we come back, the IRS is hounding you. Give us a call. What is up with these commercials? Yes. Can they do anything for us? Let's keep what's yours with Jeff Zufall, the first show of the new year. Happy New Year.
Keep What's Yours continues with Josh Gilbert and Jeff Zufall.
Back in the Big 550, back to Keep What's Yours with Jeff Zufall. I'm Josh Gilbert, sitting here with Jeff Zufall, Senior Tax Strategist and Wealth Advisor with Capital Advisory Group. Full disclosure, Jeff, you are my tax guy.
Yes, I am.
So you're going to be asking me, where's your
stuff
Where's your stuff?
No shoe boxes either.
And I'm going to come in with a shoebox, and you said, what did I tell you last time? So let's talk about that real quick. No shoe boxes. What, as the tax preparer, as my tax guy, and it's not just I come and see you once a year. It's all kind of year long. Mm-hmm. We have a conversation. What do you want me to bring, if not a shoebox full of receipts that may or may not have faded?
So when we start this, what you'll get here shortly is you're going to get a tax organizer. A lot of people say, oh, tax organizers are outdated. It's not. All it is a memory jogger for you. And it's where it may have all of the data from the previous year's tax return on it, and it kind of helps you round up the data that you need. The last page of it says, here's the documents you had last year. We need these.
And this is something that your office will send me.
Yeah.
Because I'm a current client. You did my taxes last year. You're going to shoot it out to me and say, this is what you gave us last year.
Yeah.
See if you can't get this together this year.
Any changes or extra stuff that you have, you just put it in there, maybe make a little notation, say, hey, we opened a brokerage account, we have an extra 1099, we moved money, we have a 1099-R, whatever the case may be.
And these 1099s, we always say, starting this year, I don't think we can say it early enough, do not try to file your taxes too early.
Yeah. So typically IRS will come out. They haven't yet. They've just started to get the e-file system back on track. It shuts down December to sometime in January. And they'll announce here shortly the first day to e-file will be January something. We don't know what that is yet. Yeah. Last year, I think they pushed it to February 8th or 10th.
But, I mean, I don't even have my W-2s yet.
No, they're not even supposed to be. Technically, they have to be postmarked by January 31st. So most people get them into January, first week of February.
Right.
That's your W-2s. The 1099s, the brokerage companies get a little trick. They can send a preliminary one, which means they meet that January 31st deadline. But don't get excited because they may not have the calculations yet, and it might be late February before they come out.
So we came to you and we already had this pre-existing E-Trade account, and I haven't really done anything with it. I just left the money in there, and, I've got some losses here. I've got some gains there, but I haven't sold anything yet, and I don't really want to touch it because, what do you tell us? Just leave it in there. I got plenty of time. So E-Trade will send me a 1099.
Yes.
But they probably won't give me a finalized version until sometime mid-February.
So,
and I have to include that on my taxes.
Yes.
So if I send my taxes in without a finalized 1099, I'm going to be kind of spit out of the side of the machine.
Not really spit out of the side of the machine. So if we get to mid-February and you say, hey, I have everything other than this one 1099 I'm waiting for, the culprit usually is what's called a K1. If you don't have it, you could bring all your stuff. Just make sure, say, hey, I'm still missing this one. We can start working on the return until that comes in. And there's nothing wrong with that. But it's, typically, and I say the shoebox. The shoebox is where you take your medical receipts and you don't add them up and just throw them all in there.
Right.
Somebody has to add those up.
And somebody should be us.
Well, technically, yeah, because I don't need, as a preparer, I don't need you to prove those receipts to me. Just it's on your honor in a sense to say, hey, I have $5,000 of medical expenses. That's what I need.
Yeah.
Now, if I want to back into it and say, well, what do you mean $5,000? Show it to me. I could work backwards into it. But technically, legally, it's on your honor. So if you tell me you got $5,000, that's what I'm going to put on there.
Medical expenses, add those up in a spreadsheet. Yeah. If you do the gas mileage and you drive a car for work, add that stuff up and give Jeff a bottom line number.
Yes. You as the tax individual need to keep those receipts. Keep them forever and ever if you have a business, seriously.
Right.
Just because if you ever get called out, you need to produce that receipt, that credit card statement, whatever it is, bank statement to prove, hey, I do have this.
But payment. For our tax preparer, you don't need all that stuff yet.
Yeah. I don't need piles and boxes of stuff to put it together.
Right. Just give him a bottom line number of all that stuff and then, staple your taxes together.
And on that organizer, it will have, hey, what'd you spend for medical? And it gives you a line item. It shows you what you had last year.
It gives one line item. It doesn't give a spot to submit,
staple 50. Yeah.
Just right down there for Jeff. And then if the IRS comes back and says, prove it.
Then we work with it.
Then we'll get the receipts out.
We get notices all the time. Crazy stuff. IRS didn't get this. They didn't record that, whatever the case may be. So the letter writing campaign, we're very efficient at that, unfortunately, these days. Hopefully that drops off because the IRS is now hiring people, and it gets back on track here shortly.
Yeah. So, and it is an on your honor system, but if you submit taxes without including a 1099 or a K1, the IRS has that on their side.
So always remember the W-2s, 1099s. There's a master copy that gets sent to the IRS.
They have
with your Social Security number on it.
If you want to take a couple of 1099s, they don't need
to
know about
they'll never know about these guys.
They will.
They will. It'll take them. In old days, it took about 14 to 18 months for it to come full circle, and you got a really nasty letter from the IRS saying, hey, you didn't report this. And then you got to go back and figure out what in the world took place. Today, it could be 2 years, 3 years. That's the time frame the IRS is behind on, but they'll still catch it. It's just a matter of time.
And they are hiring new people.
They are.
We've been talking about this all year.
Yes.
And let's get into the commercial that I just heard the other day. Now that it's, after the new year, all these, Merry Christmas and a Happy New Year from so-and-so. Now it's the IRS is coming after you. So I'm listening to this commercial, and they state in the commercial, Jeff, it's a very threatening commercial.
Oh, it's very, yes.
But they say, is the IRS hounding you? Are you behind in back taxes, this and that? The IRS is coming for you. And, they make it sound like the IRS is like in SWAT gear, ready to come in crashing through the windows.
Yes.
That's not really how it works. But they state in the commercial, are you behind on your taxes? Did you not pay last year? Did you forget to pay? Did you underpay? Yes. Did you not file? These are things where the IRS...
they will
deserve to be coming after you.
Yes.
You didn't pay your taxes on time, and you didn't call the IRS and set up a payment plan. They're going to come after you.
Yes, it's a matter of time. So
you deserve a letter in the mail.
Well, yeah. Well, yes. So what these commercials are, they're kind of playing on the emotion, because that's what we see a lot of people. And again, it's just how human nature works. They miss a tax return 1 year. Then they're like, oh, God, I owe this tax. I didn't file this tax return. I'm not going to do it 2 years in a row.
I'm scared if I send in another tax return,
what do I do
they'll
now?
be like, hey, wait a minute.
And they're really going to be mad. Then they go 3 years. And so, again, if you fall in this category, file the return, even if you cannot pay the tax.
No matter what.
No matter what. Because because on top of, so if you owe the tax, you owe the tax. We'll get into that in a second. But file the return. File it on time. And basically, the key to that is they cannot get you for a failure to file. And that's just one extra penalty they ding on top of it, which is, hey, you didn't file your return on time. Have a nice day.
Right.
We've seen that where people are always like, well, I always get a refund back. I'm not going to worry about it. They've actually started to implement a failure to file, even if you got a refund.
Even if you get a tax return.
And then they'll ding you $500 for not filing on time. So file the return on time, even if you can't pay it. Then come back and do basically an installment agreement. Figure out a payment plan, an official payment plan, not just you saying, hey, I'm going to send them $100 a month. Do an installment agreement with them. The taxes and penalties will still roll as you go forward. And the interest rate on it is kind of hefty these days. I think it's 5.5% per quarter as you go forward. So it starts piling up.
They might not have sent you a letter. The IRS is definitely behind. We know that.
Yeah.
But the juice is still running.
Oh, it's running.
And they'll go back and say, you didn't file your taxes on April 17th of last year. I think it was the 17th, right?
Yes.
Because of holidays. You didn't file your taxes. I think Easter fell right.
It was Easter, and there's some weird Emancipation Day in Washington, D.C. that fell on that Monday, so we got an extra day.
Tuesday. So they said, you didn't file on April 17th. Here's your bill and penalties.
Yeah, roll them forward.
And it's like, just because they sent you a letter a year later doesn't mean they're not going to count that whole year's worth of fines.
Exactly. So let's say that for the sake of conversation, you were sick. You had cancer, you had whatever, somebody passed away. Those are real life circumstances. The IRS is normal as long as you inform them. So if you file and say, hey, I'm going to take care of this, you start making some payments. Typically, you could discuss or have a conversation with the IRS through letters, through personal, conversation, and they'll waive some of that stuff for you if it's legit, not just you kind of trying to joke your way through it with them.
I didn't pay my taxes because I didn't have the money, so I told the IRS that I had cancer.
Yeah, that's different.
They'll find that out.
They'll figure it out, and then they'll really be mad at you. So don't lie to them in a sense. But, I mean, if you really had, a circumstance the previous year.
A hardship
of some sort, you can. I don't want to say negotiate with them, but that's what you're doing.
So the idea is, if you owe the IRS, no matter what, if you're getting a tax refund or if you owe them, file your taxes.
Yes.
If you owe them, you don't necessarily have to pay them, but you need to file your taxes and start the process of working out a payment plan. Because they'll ding you for not filing. Yeah. They'll just say, boom, right off the top, here's a fine.
Exactly.
And this show is called Keep What's Yours. We don't want to pay extra taxes.
More than what you have to. It's a tax on top of a tax.
So you need to pay them, or you need to work out some sort of payment plan. Do not bury your head in the sand and hope it goes away, because it will not. It might take a year or 18 months for them to catch up to you.
But and once they come online, and I say come online where they actually get their personnel back in place, and everybody's kind of answering phones and all that fun stuff, then the lien department's going to come back on. The levy department's going to come back on. A levy is where they just reach out one day and say, boom, they'll grab every asset that you have in a bank account.
Oh,
Suck it in. Just no notice, just boom, happens.
They can do that?
Oh, yeah. That's a levy. That's to get your attention. To say, hey, we're serious, and they're trying to collect on the debt.
What was that Harley Davidson story you were telling me?
So there was an individual who owed tax who said, I don't have the assets to pay it. Had a conversation with a revenue agent. This goes back pre-COVID. And the revenue agent's response came back the next conversation they had. They goes, hey, you got a Harley out there, don't you? And the guy was like, what do you mean?
How did they know?
Did the research, could see it on St. Louis County personal property tax that he owned a Harley.
The government knows
sell
everything.
Your Harley and we'll talk. And the individual had to sell the Harley.
So he sold his bike.
Had to sell the bike.
To pay his tax
to
bill.
pay the tax.
So
because they knew it.
Right. They know what you have. They know where you are. It might take them a while to catch up to you.
In today's environment, it will, because, unfortunately, they're way behind the game. But they will
Which is
come
why
back
they're hiring
online.
so many new people.
They'll come back online. The funding's out there for them. So that's where we sit.
So these commercials I'm hearing where they're threatening, the IRS is coming after you. What do these companies do that Jeff Zufall can't do?
They're going to be a tax attorney. You might have a litigation issue that they could go petition for you. So that's the good side of it. Typically what they're doing is saying, hey, and no offense to them, they do serve a purpose. They're going to say, you hear the late night commercial, I owed, $500 million
it's this guy in a
to
sweater.
the IRS.
I owed $100,000.
And it was settled for $10. The odds on that are pretty slim. I mean, you have to have like everything that could go wrong in your life go wrong, and you have to prove it and sell it to the IRS before they would accept it. Those are what's called offer and compromises. So that's where you go to the IRS and say, hey, I owe you $10,000. I have no assets. I have no income. I cannot pay you.
I lost my job. My dog died. I got cancer.
House burnt down. Car got stolen. So on and so forth. And then they will work with you. But it's kind of like a one out, if you want to call it. Not like you can come back each year or every other couple of years and say, hey.
My house burned down again.
And like I said, they're normal. They're humans. They get it. Especially if you talk to somebody and say, here's what took place. What can I work with? So you could do the same thing yourself. It just takes you calling the IRS.
Right.
Which in the past has not been easy or fun.
Good luck
because you couldn't get a hold of
hold.
anybody.
Yeah. And getting through to someone.
Yeah.
So the idea is pay your taxes. Send in a tax return.
File a return.
File a return.
Even if you can't pay it, file the return.
And if you can't pay it, get someone like Jeff to help you out to set up a payment plan.
Yeah.
Do not just let it go and say, I can't pay it. I'm just going to pretend it never happened.
Exactly. Because it just will roll over, and it will be a huge amount before you're done.
And I these talking heads, on the radio and on TV, the people on the commercials, they're trying to make it out like the big bad IRS. If you don't pay your taxes, this is me saying it, Jeff. You deserve to have the IRS come and contact you.
Yeah.
Because that's the law. I don't like paying taxes.
But you don't have any choice.
I don't have any choice. That's the law. Yeah. I don't like paying taxes, so I get Jeff involved, and I say, make my tax bill smaller.
Exactly.
And we work a couple of things out.
Exactly.
But I still pay my taxes, so if you didn't pay your taxes and buried your head in the sand, you deserve a letter from the IRS saying you owe us some money.
Exactly. And it'll typically be a certified letter. So I say the degrees of it is a regular letter in the mail just means, hey, look at this. Certified letter typically means talk to us, reach out to somebody. And that means that the IRS knows there's something there. They're sending certified, even with the states, and they're serious. And typically that letter that comes certified says we're going to levy your assets, which means we know your bank accounts are. We're going to reach in and take your money.
So they can do that. Just one day I go to buy a cheeseburger
and
my card gets
in there.
declined.
Yep.
The IRS took my money.
Yep.
Do they freeze it or do they take it?
They actually take it. They'll freeze your bank account.
Will they ever give any of it back?
No. Well, if they'll give it back, if you can prove that you don't owe the tax.
Right, okay.
But they're usually pretty accurate.
Right. If I owe them $1,200 and I've got $1,300 in there, they'll take $1,200.
Yeah. And poof, it's gone.
Yeah, it's gone.
I say gone. It's locked. I think they hold the bank. I forget how it goes. Bank holds it for 30 days, and then they forward it to the IRS. But they hit it one time, in a sense, as they go. So
they don't
and that's a levy.
Bury your head in the sand. They will come and take it from you.
They will figure it out.
Because, to be completely honest, you owe them.
Yeah.
And the fact of the matter is they're going to take a late payment penalty. They're going to take the 5% every quarter that they charge. They're going to take more than what you would have had to pay them had you just dealt with it at the time. So don't bury your head in the sand because you're going to end up having to – well, if you can't pay the bill now, you're definitely not going to be able to pay it when they tack on 5%.
Exactly. But that's where you do an installment agreement or something and get the wheels in motion. To just basically start making amends with them.
The IRS is big bad IRS, but they're just people just like us.
Exactly.
And they'll set up a payment plan, and they'll be incredibly fair with us if we just deal with it.
Yeah, as long as you address it,
Don't bury your head in the sand. All right. That is your first tax tip of 2023. Pay your taxes.
Pay your taxes,
Yeah.
yes.
It's kind of surprising that we have to tell people that. But let's go to commercial break, and when we come back, there are some tax hikes that hit January 1st. So we're a week into it. Has it started to hit my bottom line yet? We'll find out. Jeff Zufall is the senior tax strategist and wealth advisor with Capital Advisory Group. He's my tax guy. He's my wealth guy. He can be yours too, 636-394-5524. If you like what you're hearing, if you're listening and you said, I avoided paying my taxes last year because I just didn't pay them, give Jeff a call because, as you now know, the numbers are running. The VIG is rolling.
Yep.
I don't like to equate the IRS with the bookie that you don't pay. But it's
worse.
It's worse because they can throw you in jail. So give Jeff a call, 636-394-5524, CapitalAdvisoryGrp.com. Keep what's yours. We'll be back right after this.
Keep What's Yours continues with Josh Gilbert and Jeff Zufall.
Back on the Big 550 KTRS, first show of the year. Keep What's Yours with Jeff Zufall, 636-394-5524. Call Jeff now. What you're going to get is his voicemail because he's a little busy at the second. But leave your name and number. Say, look, I heard you on the radio. We're not doing anything as far as mitigating our tax bill. We're going to do a whole show in the coming weeks about required minimum distribution, taxes in retirement. Mm-hmm. If you're not doing anything to mitigate your taxes in retirement, you're leaving so much money on the table.
Yes.
It's almost disgusting. You made a plan to save for retirement. You need to make a plan to spend.
Yes, exactly.
In retirement as well. But just leave a message for Jeff and say, I heard you say a couple things on the air. Josh is saving money on his dependent daycare. Mm-hmm. So how can I get involved with that? I've got a little one too, or I've got kids in school, or, I had a twin daughter born in 2022 and a twin daughter born in 2023. That story out of Texas where one twin 11:55 p.m. The next twin came coming down the chute 12:01. Yep. The next day, the next year, that's going to wreak havoc with their taxes. Give Jeff a call, 636-394-5524. Give your name and number and say, call me on Monday. Let's talk. Now, I saw an article last week that I sent over to you, Jeff, and this is from Americans for Tax Reform. And let's just be honest with who they are. We don't do politics on the show, but we point it out when it needs to be.
Yes.
This is a very conservative tax think tank.
Yes.
And the headline is List of Biden Tax Hike Hitting Americans January 1st. So let's go through these and say what they list. Are they being right in calling these out? Are they being disingenuous by blaming the current president? What is actually going on here? Let's talk to the tax guy.
Yeah. So on here, I think 3 of the 4 are legit, and we're seeing it today. So there's a $6.5 billion natural gas tax. So they're and what you'll see is the theme is fossil fuels basically are going to pay a higher tax. That's basically the sentiment of the current administration.
Is it because they're trying to push us to renewable energy?
Yeah.
They want me to get solar panels?
Yeah, solar panels and electric car and all that fun stuff. And for some people, that's great. Other people, it's not going to work. And again, my stance on the technology, it's awesome. But again, where's it really fit? You know what I mean? So, but there's a $6.5 billion natural gas tax, which is part of the Inflation Reduction Act, which has nothing to do with inflation.
We've talked about that before.
But it's part of it. So, and then it's a $12 billion crude oil tax. So again, crude oil, you know, unless you have an EV, you're putting gas in your car, you're paying for that stuff. So I agree there. And then the coal tax, you know what the administration's stance on coal is. Oh, they hate it.
Dying industry.
Yeah. So funny part, though, is I forget where that was. I read something, Australia, maybe Europe, that their energy costs are so high that they've just fired back up the coal plant. Yeah. So they're trying to get their prices down. And again, I just read Ameren sent your latest Ameren bill. I very rarely pay attention to that, but it kind of correlates with this. Ameren wants for St. Louis 11.5% increase, and I believe it's Missouri American Water has got another rate hike out there, or MSD, one or the other, that they're going to the commissions to get increased. So again, I agree with all these. Other than they say it's a $74 billion stock tax, which is where corporations for stock buybacks have to pay I'll call it a penalty. They pay a tax for it. I think that's a stretch. You and I, hey, I'm going to put money in my 401k, or I'm going to go buy a stock. Yeah, you know what I mean? We're not really going to pay
We'll never
that.
get hit by this one.
Yeah, not unless you're trading huge amounts. And when they do a stock buyback, you're talking billions of dollars and tens of thousands of shares being purchased.
Well, okay, so let me go back to the three, and they all kind of pertain to the same thing.
Yes.
Fossil fuels.
Fuels.
$6.5 billion natural gas tax, $12 billion crude oil tax, and a $1.2 billion coal tax. Mm-hmm. These are going to make our energy bills go up. And then this one says 16.4 cents per barrel tax on crude oil.
Yes.
I mean, that's a little... It's a little bit.
It's a little bit.
16 cents here and there.
But again, as you go forward, you will see natural gas. I mean, I just had gas, which is probably the worst time ever to do it. Gas fireplaces put in my house.
Oh, yeah.
I got sick of dragging wood in and all that stuff. So I just said, let's do it.
This will amount to almost a 17% increase on an average family's natural gas bill.
Yes.
Now, how does that equate to my personal situation? I don't know.
If you have an all-electric house, you're okay.
If I don't use natural gas, I don't have a problem.
If you got a hot water heater, like gas fireplaces, gas
I did just
furnace.
get a gas fireplace.
Yeah.
I think the hot water heater is gas.
Yeah, so you're going to pay.
I'm going to see it.
Yeah.
I do have, it's funny, I've got a friend who lives behind me, very ultra-conservative, I don't even have to go into it, just, ultra-conservative. He's against, green this, green that, but he just got solar panels.
Yeah.
Because he said he was sick of paying his electric bill. So,
I mean, that's why I say, and again, some neighborhoods are like, no, you can't do that. Others are like, hey, I think there was a big court battle on somebody off Clarkson Road had solar panels put on their house, and it became this legal battle with the neighborhood, and they ended up winning. And again, and I've seen the stories where, it didn't mathematically work with tax credits and everything that's sitting out there. I don't see how they don't work.
Right.
The question of the day is when it's doomy and gloomy out in the winter, you're probably still going to pull from the grid. You don't have any choice. So
if I come to you, Jeff Zufall, senior tax strategist with Capital Advisory Group, and I say we are sick of paying our gas bill, we want to look into solar, what kind of credits are out there?
Oh, yeah.
That might make this more worth our while. You can crunch those numbers and kind of let us know. I mean, if I got an electric car, You know, I want to save money on gasoline, but I also don't want to pay for the electricity.
Because, that's the other side of the equation is if they force, and again, not getting into any politics, but if they force people away from fossil fuels, push them to the electric vehicles, the odds are the cost of that electric is going to go up over time.
My Motomart bill went down, but my electric bill at my house
just went up.
Yeah.
You know,
so am I robbing Peter to pay Paul?
Exactly.
What are we doing here?
And that's the math that as a consumer you have to sit down and look at. But you don't know what the hidden costs are or hidden increases down the road, and you got to go with it.
All right, how about this? Here's the last one. Americans for Tax Reform, very conservative think tank when it comes to our taxes. They've made a list of tax hikes that are hitting us. How they might affect us. Are they being disingenuous, or are they really sounding an alarm that we should be taking note of? $225 billion corporate income tax hike. This is charging the 15% minimum tax. GE gets away with paying no taxes because they utilize the loopholes. They want to get rid of the loopholes. They want at the very bare minimum, GE has to pay 15% taxes.
There was a tweet from Biden just the other day, 2 days ago. Then he said, all the corporations are now going to pay their fair share of 15%. I haven't seen any ruling and again, most of these corporations, if they figure an angle out, they're not going to come out publicly and say it.
Right.
They're just going to do their thing.
They've got whole floors in a building of lawyers working on this.
So that's the only one of the four. I find that's a stretch. I don't see that as us as consumers getting hit.
So if GE has to actually pay taxes this year, they're going to charge us more for microwaves.
They're going to pass it on, period. I mean, they're not going to eat it and go, hey, our corporate profit took a 15% ding because we had to pay this tax. They turn around and raise their prices by whatever that
our microwaves
true tax
now cost $59
exactly.
instead of $58.
Yeah. Period.
Okay.
And they'll figure out how to do that. But I still assume that the corporations will figure out what angle. And again, there's income thresholds, or I should say revenue thresholds for these corporations, So
there's always a loophole. So there are tax increases that are hitting us that will start showing up on our electric bill. You said our water bills.
Yeah. And I think one of the things
gas bills
that these guys are talking about is Biden did say that anybody making less than $400,000 a year will not see a tax hike, which a true tax hike in your face on your tax return. No, not yet. But in these increases, yes, you will. Doesn't matter.
They're charging higher taxes on the natural gas. Yeah. They just pass that on to us.
Pass it right on.
So the administration didn't tax me more, but the gas company did
in a roundabout way.
Yeah. So well, that makes a lot of sense. So in the next couple of months, I'm going to be looking.
You're going to see
looking at my bill.
Yeah,
it to last year.
And Europe is having, how would I say it, even a harder time than what we are. Literally, that's why they fired up a coal plant in Europe just to try to bring down the cost of electricity over there. So hopefully we don't go down that path.
Right.
But we'll see.
Well, a couple of things that we want to hit before we wrap up. It is the new year. These are things that we want to keep in mind for 2023. The Secure Act is out there. There's things with our RMD, required minimum distribution.
I believe there's 85 different retirement items within the Secure Act that were passed. And we're going to have a whole show coming up here shortly just on all the different provisions.
80 plus new things that pertain to our retirement.
Retirement only, which is crazy. Yeah, yeah.
But there's some good things in here.
Oh, there's a bunch of good things.
We can now because of inflation.
Yes.
Because of inflation, we can now contribute more to our 401k.
So that's the one thing from a planning standpoint. Make sure that you go, and if you're of age, you get a higher contribution to 401ks, IRAs, Roths, catch-up provisions. We have a higher standard deduction in 2023 than what we did in 22. The tax brackets themselves increased by 7% in 2023. So I've seen two camps of thought on this. And again, the 23, we just got the software updates, so we haven't been able to really do a lot of planning yet for 23. But I've heard the camp saying, hey, we didn't have the stimulus checks out there and the child tax credits and the PPPs and the EDILs, so you're going to pay more tax in 2022. But again, the flip side of that is it looks like inflation has helped to boost everything that we have from a deduction standpoint way higher than where they were.
Social Security is going up.
Social Security went up. So that's kind of where we sit. And so look at those for 2023 going forward. The other side of the equation is if you're self-employed or run a business, your mileage rates. So we had two separate 2022, it had to be broken January 1 to June 30th.
Yeah.
And then July 1 to December 31st. It was two calculations. So it will actually, on the tax return, you're going to have to report
mileage on my car.
Yeah. First half is X, second half is X. And guess what? For 2023, it went up by another 3 cents.
It's going even higher.
Yeah. So
and that's because of inflation.
So we're 65 and a half cents per mile for business use. Excuse me. And then we are 22 cents per mile for medical or moving purposes. But the moving purposes are strictly active duty military. If you're told to go from this base to that base, they get to take a deduction for moving miles. Nobody else does.
Okay.
So charitable contributions, 14 cents, hasn't moved. They're not moving it at all. But here's the kicker. And this is where it's kind of been a debate in the tax world. These rates apply to electric and hybrid electric automobiles. So you go, wait a minute, it's really supposed to be paid for gas, but you got an electric car, you don't really pay gas. But
I'm not paying gas, but I'm paying the electric company.
Exactly. You drive your Tesla for business, you get it, the deduction.
All right, so that's going up. So if you drive a car for business and you take that mileage deduction, that's going up. And then this other thing that everybody was talking about, you hear it on the radio shows and the TV shows. The IRS is coming after your microtransactions. Anything over $600, they were going to issue a 1099. You sell something on eBay and it was over $600. You get a 1099 for that. That was supposed to take place this year.
Yes.
But it's
been stalled a year. So
because
for more guidance.
I think they realized, oh my gosh, we're not ready.
Yeah, I think that's
to take care of this.
It's part of not ready. The tax field was like, oh my gosh, everybody's going to have a 1099K.
Stop flooding us with 1099s. We're not ready for this.
Crazy, and the bulk of it does not apply to self-employed. It's you send your kids money in college, and you do it through your Venmo app. You buy something online. Now, there are resellers, are people that are selling stuff. Yes, they need to report that. That's their real live income. But what they did was they went back to their $20,000 total revenue. Our 200 transactions will now generate a 1099K.
So there's a lot of stuff out there that we always just think, I can get away with this. The government doesn't need to know about that.
Exactly.
But technically, it's supposed to be taxed. You told us famously, if you find $20 on the ground,
exactly, it's
the
stupid,
IRS
but they want that's
technically
found money. Yeah.
Should be you should be telling the IRS about it, and we should do a show maybe next week because I just looked at I got my credit card said this is how much money that we kicked you back for cash back just because you spent $6,000 with us buying groceries this year. Well, technically the IRS probably wants to know about that too.
So yeah, and there's a lot on from a business standpoint. There's people that use their Capital One cards,
their American Express cards for all their business expenses,
and then they get this stuff kicked back on the backside. Technically, that's gift card should be reported as income.
Yep.
And a lot of people are like, oh, they'll never know about it. Yeah, they will if they audit you. They'll figure that out real quick.
So if you think that the IRS is nickel and diming us, they are. But if you got away with it in the past, well, maybe you got a free pass.
Yeah.
But they probably should have come after you for that stuff.
And just with COVID, they are so far behind. It's not even funny. But they're coming online slowly but surely. So
they're hiring people. So the taxes that are supposed to be paid to them, they're going to try to get them.
It'll ramp up.
Well, it's been eye-opening to say the least, Jeff. The first show of the year, one of our best that we've ever done. And to a great 2023. Don't start your taxes too early.
Not too early. Start preparing,
get them ready, together. But don't think about filing them
because again, if you file them and then you go, "Oops, I missed this 1099."
I forgot to put this on there.
Or my 1099 was corrected, and a lot of the brokerage firms are notorious for that. You have to amend your return, and you have to redo your return, and then unfortunately, we're still in the state of Missouri. You have to mail it in.
Yep.
So the Fed gets mailed in, and it could be 6 months before somebody touches it. The state's very, I'll say, accurate. A couple weeks tops turn time. They're on top of it. So
don't file until you're sure you have all the forms in place, and make sure that those forms are the most up-to-date.
Yes.
With the most up-to-date numbers, or just call Jeff, 636-394-5524. That's what we've done. I always gave my taxes to my sister to do. She's a whiz with numbers, but then I got married, and I had a kid, and we got a condo down in Gulf Shores that we Airbnb, and she goes, look, your taxes are too hard for me.
Not worth it. Yeah.
You need to go see a professional. Which is not the first time someone said that to me. 636-394-5524. We chose to go to Jeff Zufall, and you should too. Keep What's Yours with Jeff Zufall. Happy New Year, Jeff.
Same to you. See you next week.
You've been listening to Keep What's Yours with Josh Gilbert and Jeff Zufall, Senior Tax Strategist and Wealth Manager at Capital Advisory Group. To learn more, call 636-394-5524 or visit CapitalAdvisoryGrp.com.